All right. Hello, everyone, and welcome to today's session on balancing the books with AI. My name is Casey Boone, and I'll be your host today. I have a few free session housekeeping notes before we get started. Please note the chat feature located on the right side of your screen. We hope to see you all participate by submitting any questions or comments you may have in the chat box. Before you submit, be sure your audience is set to everyone so that we can all engage with you. The chat is being monitored throughout the session. Today's session is also being recorded, and a copy of the slide deck in PDF format will be posted on the portal events page. We will be using Conferences.io to check in and submit polling questions for today's session. So please take a moment to look toward the lower right corner of the platform for three little dots, or you may have an app function at the bottom. You are looking for Conferences.io. Once you check in, if you do need to minimize your polling panel, you can still find it in that lower right-hand corner. For those who would like to access the polls on your phone, you can use the QR code on the screen, or you can use the link that you see in the chat to access it in the browser. If you do not see the link, I will re-add it in just a moment for those that are just joining. Currently, there are no poll questions listed. However, you should hear a notification once a poll has been launched. You may need to check your notification settings if you are using a mobile device. You will stay checked in to Conferences.io throughout the entire event, but if you have to check out for any reason, just be sure you check back in using the same email address. Now, to earn CPE credit for today's session, you will need to answer a minimum of 3 poll questions throughout the event. To respond, simply select your answer and then click the submit button. If you have any technical issues, you can message me privately in the chat by changing the audience to host only. I will be launching the first poll question here shortly, so please acknowledge if you would like to share your contact information by selecting either yes or no, and then hitting that submit button. I am going to switch our presenter and hand it over to Mr. Sid Saxena, CEO and co-founder of Docyt.
All right. Thank you so much, Casey, for the introduction. Hi, everyone. Good morning. My name is Sid Saxena, and I am co-founder and CEO of a tech startup based out of Silicon Valley called Docyt. I will take you on a little bit of a historical journey on how artificial intelligence has started impacting the profession of accounting and the history and roots of artificial intelligence. Let me start with sharing my screen, and please let me know once you are, if everything is visible. Casey, how is it looking?
It looks great. You are good to go.
All right, fantastic. So, by the way, this is my first engagement with BDO and one of my first webinars with BDO. So I don't think I have met any one of you. If you are in the Bay Area, please send me a note, and would love to meet with you in person as well. My background in accounting is actually very limited. I'm not an accountant by my profession. I am actually a product designer. I come from the world of software engineering and user experience design. The first time I landed up in Silicon Valley was when I was still in grad school in Indiana University, Bloomington. And I wanted to visit the mecca of human-computer interaction, which was Xerox PARC. So after I completed my first semester, I booked my ticket to Silicon Valley and landed up over here, stayed with some of my friends in Stanford, and biked all around Silicon Valley. I interacted with a number of folks who were working in the profession of human-computer interaction. That journey led me on to starting to work for Oracle Corporation for a few years, then VMware, which was pioneering virtualization software. By working in these companies, I learned a lot about enterprise software, and I learned about business models. SaaS as a business model was emerging. So systematically, I went deeper and deeper into the tech world, and I realized that building a company and a technology company is something that I should pursue if I am in Silicon Valley. One thing led to another, and my internal joy of learning more about finance that led me on to building a company which deals with accounting as its core focus area. But today I'm going to take you on a little bit of a history and evolution of computing. And please feel free to raise your hand, feel free to ask a question or stop me if you're curious about a particular point of opinion or if you have any questions. I'm personally very curious about finance and how people make money. When I started reading about this topic, I realized that humans have always wanted to count their money. The whole notion of a monetary system emerged to accommodate that inherent human need. This has been one of the most fundamental use cases of human interactions since the beginning of time. Currencies, banking systems, all of them came about to satisfy this most foundational of human need. When we go to the 1940s, that was another very interesting time in the evolution of how technology was emerging on the landscape. This was the very first time when humans also started asking about evolutions in technology and can machines think. This was a time when comics were coming out, when a lot of people were starting to think that can technology one day become smarter than humans? Uh, that fundamental question of can machines think really got ingrained in the minds of a lot of researchers who were early pioneers in the world of computing. In 1950s and 60s, these folks started doing a lot of theoretical research into algorithms, into core, computing science as a profession. When we look into the history of accounting, it actually runs parallel to the history of computing. LandPower was one of the first spreadsheet software, or rather electronic spreadsheet software that was created. It got created in 1969. Funny story, they tried patenting their software for close to 12 years, but USPTO kept on rejecting it. Eventually, USPTO gave them the patent, but unfortunately, it couldn't be enforced. A decade later, 1979, VisiCalc came out in the landscape. VisiCalc was one of the first software success stories. This company went from boom to bust in 4 years. It was the first viral software before we even had heard the concept of viral software. And one of the important changes that VisiCalc brought was it actually single-handedly increased sales of personal computer. Apple's Mac 2 had arrived by that time. Macintosh 1 unfortunately wouldn't work for VisiCalc because VisiCalc required at least 20 kilobytes of memory, and Apple 1 was not suitable. Apple has been playing the memory game for a long time. So Apple II was the preferred personal computer on which VisiCalc was working, and single-handedly overnight, sale of Apple Macintosh went up because everybody wanted to use VisiCalc software. So if you think about it, the computing world and the personal computing revolution has a lot to thank to the accounting profession and the need to do calculations from an accounting perspective. Then in 4 years, Lotus, which was started by a product manager, Mitch Kapor from VisiCalc, that came into being. And overnight, Lotus decimated sales of VisiCalc. Why? Lotus had one nifty innovation. It, for the very first time, brought macros into the spreadsheet software. This was also the very first time when some kind of an automation has come up inside a software and inside personal computer. And automation inside a spreadsheet, of course, means that work on an accountant or a bookkeeper who's trying to run the spreadsheet, it can save a little bit of time. That particular approach took hold, and this was also a time when Microsoft Excel was also being developed. Microsoft Excel was one of the first software written from a graphical user interface perspective from scratch. And it was such a simple interface that 4 or 5 decades later, Excel still is being used across the world. So when you think about the evolution of the accounting software, one after the other, there has been a groundbreaking innovation, either from packaging the product into a simple to use software, or bringing in macros and some automation, or making the user interface extremely simple for any common person to use. But somewhere after the 1980s and early 1990s, innovation really started getting limited. And here we are in the 2020s when finally AI has brought out a paradigm shift. So let's take a look at where and how this particular industry evolved. The, the whole area of artificial intelligence, it has seen a variety of boom and bust cycles. Uh, the pioneering work in algorithms started in 1970s. A lot of OCR-oriented algorithms were created. There was a lot of funding that came in, but very quickly people realized that the computing power available at that time was extremely limited, and data available was also very limited. So AI research has seen these multi-decades of boom and bust in 70s, in 90s, and again in early part of the 21st century. Funding came in and went away. But finally, what provided a real tremendous shift towards bringing AI into the forefront was innovation in the way software was being done. However, when you think about the accounting software, the past 3 decades of ERPs really did not bring any substantial innovation. And part of the reason was ERPs have an iron grip on their customers. Once you acquire a customer, there isn't any reason for innovation left. The software industry became tremendously fragmented because ERPs were widely adopted. Only innovation possible was in piecemeal areas, piecemeal use cases like bill payments, like expense reporting, or maybe a little bit of checklist oriented management in the month-end closing process. Cloud-based software like QuickBooks, NetSuite, they all came about, but their mindset is still stuck in 1990s approach of manual book closing. While all of the research in AI and computing was happening, the software that was adopted by the larger business world was still stuck in the mentality of the past. When you think about it, no one wants books being done a month later. No one ever said, I need my financials, balance sheet, income statement delayed by 2 weeks. Everybody wants their data now. The rest of the software industry, when you look at enterprise software, when you look at database software, it's designed to deliver your report and information instantly. But why is accounting and accounting software created processes that delay the closing of books? Making accounting real time is now the holy grail of enterprise finance, and still it's the biggest challenge out there. Where are we headed from here? We believe in Docyt that bookkeeping will be 100% automated by AI in the next 3 to 5 years. And when you think about bookkeeping, this is a foundational process before client advisory can happen, before taxes can be filed, and before audits can happen. So unless the accounting software utilizes artificial intelligence technology in a manner which automates bookkeeping, the real innovation in accounting will not happen unless bookkeeping as a foundational area gets automated. But what does it take to make accounting real time? There are 3 fundamental areas where innovation needs to happen. As I was talking about the history, the theoretical research into AI and machine learning algorithms. Now, this area has already come about substantially. You might have heard of terms called large language models products like ChatGPT. But even before that, traditional AI and machine learning algorithms like neural networks, convoluted neural networks, supervised learning, unsupervised training of data, all of these machine learning models, decades of compute research investment has happened into all of these areas. Finally, now AI has come to a mature stage where these algorithms can actually provide augmentation into real professional workflows. The second key area where advancement had to happen was in semiconductors. This was also the reason why 1970s, 1980s research into AI could not deliver tangible benefit to the wider industry. Finally, now through pioneering work by NVIDIA, by other companies, you have GPUs available which are substantially lower in cost, but tremendously more powerful, which can do billions of calculations in a matter of a second and deliver a lot of decision-making capability to the AI machine learning algorithms. And then finally, advancements in software engineering. In the past 3 to 4 decades, software engineering and tech companies have evolved to an extent where the previous business model, where capital expenditure into data centers had to be done by big companies, only then software benefit could come about. But with cloud-oriented data centers, now a tremendous amount of technology is available through software as a service business model. What this has done is software has become extremely cheap. The way people are able to save tremendous volumes of data has become very cheap. Amazon Web Services provides terabytes, petabytes of storage service at pennies in terms of cost compared to what used to be there 3 to 4 decades ago. So all three of these fields finally have now come together to provide an innovation ecosystem where there are powerful algorithms available, extremely powerful compute and GPU technology is available, and innovation in software and the business model innovation exist to deliver vast amount of storage to all of these algorithms at a very cheap cost. I'll pause over here unless there are any questions so far, and we'll move on to some of the interesting areas in future.
No questions so far.
All right, fantastic. So continuing on the same line of thought, why is real-time accounting so important? The most important idea behind real-time is decision making. When a human wants to make a decision, it could be an important mission-critical business decision. It could be a decision around purchase or procurement. It could be a decision around hiring. It could be a decision around the life cycle of your business, whether to keep the business, to sell it, or expand the business. Everything depends on data. Now, with advancements in software, advancements in artificial intelligence, and rapid processing of all of this data through powerful compute and GPU infrastructure, number crunching has become extremely easy and fast. All of the important decisions, which are derived decisions, which are not just dependent on one level of data, meaning if you have a certain number, you want to derive information out of it. But how about you ask a complex question? Is my business going to be profitable in the next month? That's an extremely complicated question. Can real-time answers arrive for a complicated question like that? In order to answer such questions, accounting and the process of number crunching of business data has to become real-time. What will real-time accounting deliver? Businesses can have a live view into their fundamental unit economics, into their fundamental financial ratios. If you take our industry, hospitality, Hotels want to track a fundamental unit economics number, which is a mix of financial information and business information. Let's take an example, gross operating profit on a per available room basis. So if you are a 50 room hotel or if you are a 500 room hotel, this unit economic metric is going to deliver you consistent and comparable information. But accounting software can only give you the numerator of the ratio. The denominator still comes from business data. But if number crunching can happen in real time from financial perspective, as well as from business analytics perspective, then the business owner could be informed to make real-time decisions on how the rates for the next day should be set in order to get a better output in the gross operating profit on a per available room basis. Similarly, if you are in the SaaS business, your customer acquisition cost and lifetime value of a customer, your variety of payroll over revenue metrics, all of these are important unit economics and financial ratios, which provide enough information to key decision makers that they can actually make important and sound decisions. However, if the financial reports are delayed by 2 weeks, a month, this level of decision making is just not possible. So when you think about accounting, if accounting becomes real time, if bookkeeping is becoming real time, then businesses will be able to take faster and more accurate decisions. Another important thing is when you think about information that a business needs, of course, every business wants things to be cheaper, faster, and more accurate. Now, accountants love accuracy, so that gets delivered. Businesses want things to be cheaper, so that gets delivered through cheaper software. But faster, can the same stuff be delivered faster? That was not possible until now. Automation on top of the general ledger that can deliver real-time accounting will actually be able to deliver cheaper, accurate, and real-time financial data, books, and metrics to a business. Once again, to go back about why it's going to be cheaper, because of cloud software, because of extremely cheap storage, the capability to deliver important financial information and unit economics data has become extremely cheap. Because of AI coming in, and I'm going to talk a little bit about the flavors of AI here in a moment, because of artificial intelligence and machine learning algorithms, which can do number crunching with 99 or more % of accuracy. Now, decisions around variety of topics in bookkeeping and accounting can be done more accurately compared to the past. And things can be delivered in real time because everybody have a mobile phone now in their hand. Generative AI, like the kinds of stuff we are seeing through ChatGPT, is also closing the last mile human-to-human interaction gaps, so things can be made more real time. Now let's talk a little bit about this term precision AI. So here I would like to talk about the kinds of AI models that exist in the market. Most of you may have been hearing the terms AI and machine learning for the good part of the last 5 to 7 years. A lot of those terms use algorithms from artificial intelligence and machine learning world, which were more traditional in nature, which were getting applied on workflows that process and consume data. So when you think about an invoice, the capability to extract data out of an invoice is precision AI model. Now, if these models can extract information with 99% accuracy, then that makes the workflows very accurate. A combination of variety of machine learning models doing data extraction, doing categorization, doing reconciliation, all of these can be combined into an umbrella bucket called precision AI models. The requirement over here is that there cannot be even 1% of mistake in the decision making by the machine. However, on the other hand, large learning models, like the kinds that we are seeing ChatGPT, are part of the umbrella called generative AI. Generative AI algorithms, they scour vast amount of data, and in OpenAI and ChatGPT's world, they have scoured the entire World Wide Web and a variety of other data sets. After consuming this data, this particular model starts predicting a way to make the human happy. When a human asks, "Who am I?" then the AI tries to make the human happy and tries to predict what should be the next word, and then the next word, and then the next word. Here, accuracy is not important. What's important is to create an answer that can make the human happier and probably get or answer the human's question. So you could understand over here why ChatGPT sometimes hallucinates. It can make up things, it can make up numbers, it can even make up a balance sheet for a public corporation. That is not good from accuracy perspective or from usage in an accounting or bookkeeping scenario. However, where generative AI is really good is once you provide it some text or some information, it can create a succinct gist out of that conversation. So it can talk to a human, or if two people are talking and there's a chat going on, it can create a consolidation in terms of crisp information, which could actually be used in areas like deciding on categorization and such. So what we have been doing in Docyt is building both of these kinds of AI models and combining them together to really deliver real-time accounting. If you go inside these boxes a little bit more, then an even deeper picture starts emerging. When you think about workflows like bill pay or corporate credit card management or revenue accounting or account receivable, vendor compliance, budgeting, all of these workflows will fail if accuracy is not there. As a result, more traditional AI models that can do data extraction, that can do variety of tracking of data, how it is going from one workflow to another, that is what's needed. You cannot use ChatGPT inside of a workflow and expect it to deliver clear results. Similarly, when you're trying to do continuous reconciliation of this data, then again, you need AI algorithms that are extremely precise and accurate. These can apply in transaction categorization. These can apply in either collection of documents or matching of these documents with the right transaction. And of course, in the month-end closing process. When you go towards the generative AI side of things, this is where insights can be provided by generative AI. The point that I was mentioning in the previous slide, if two humans are interacting or if there's a large amount of content available, then generative AI can make it more succinct. It can create insight out of that data. From a bookkeeping side of things, if you think from that perspective, imagine the first box is everything that is happening before the books are closed. And the second box is what's happening after the books have been closed, data has been uploaded into the ERP, and now somebody wants reports out of it. or somebody wants insights out of it, and perhaps some folks may want a future prediction based on the past data. So this level of insight generation becomes easier through large language models which power generative AI. Again, I'll pause over here in case there are any questions. Okay, I'll keep going. From a book closing perspective, one of the key problems that has existed, which made book closing so manual, was piecemeal software. When you have one software for bill pay, when you have one software for your travel and expenses, when you have another software to do XYZ, then all the data is distributed. What that means is now traditional AI and generative AI have to go in multiple places through perhaps API-based integrations and such, which are not easily available. Not every point of sale solution or payroll solution has provided open APIs, which can be used by machine learning models. As a result, data gets siloed. Additionally, human touchpoints, which were previously created for valid reasons, human gatekeeping in the process of bookkeeping was added for valid reasons, where a experienced accountant or a bookkeeper would make the decisions on categorization, would make the decision on accruals, would make the decisions on how and when to accept something into the general ledger. But what that did was, as volumes of data increased, the process of month-end closing and book closing kept on getting delayed and delayed and delayed. And due to pressure from the market, when there is financial cost reduction coming in due to the demand of the businesses, that meant accountants had to take on more and more customers in order to deliver same amount of revenue to the firm. What that meant was most of the book closing tasks were kept after the month closes, as opposed to providing more human resource, which is shrinking in the accounting profession already. So less human resources available to close books on time. All of these pressures eventually meant that businesses are not able to get their books on time, and the process of month-end closing gets delayed. One of the important innovations that Docyt has delivered is the live month-end closing software. The only way month-end closing can be made live is if there is a single system that has expense side of data, that has revenue side of data, and that has added continuous reconciliation, AI, and machine learning technology to continuously process this data and act as that technology-powered bookkeeper, which is making real-time decision on every transaction, every document that is coming in. By having month-end closing in a live format, what that means is when bank transactions happen, when a document or a receipt or invoice gets scanned, all of this information is processed at light speed. Categorization happens at light speed. And wherever human controls are needed, they can still be kept from an organizational perspective, but they are no longer mandatory or needed. This is a screenshot where Docyt's month-end closing module is able to do bank reconciliation in real time. Another way to think about this is when you look at balance sheet, every line item of the balance sheet has capability to actually become a tech software company. When you look at accounts payable, there's a bill.com. When you look at travel ledger, there's an Expensify. When you look at accounts receivable, there are countless number of companies that have come up to solve account receivable problem. When you look at your variety of other asset accounts, you might be dealing with spreadsheets that manage depreciations and such. So every line item of the balance sheet has the potential for some SaaS software or the other. Extending that thinking, every line item of the balance sheet can actually have custom AI and machine learning that is capable of absorbing the data that is valid for that line item, process it, and accept it into the books. Docyt is actually developing all of this AI and machine learning technology that can reconcile the entire balance sheet in real time. Our software is today live on 700 plus customers in 15 plus industry verticals. Small business owners use Docyt, internal finance teams use Docyt, and variety of accounting firms and CPA firms are also using Docyt. I won't go into much detail about the company, but this was the extent of the presentation that I wanted to do, and I want to leave about 20 minutes or such for additional questions and other thoughts that folks might be having. I can talk about the Docyt platform a little bit, but generative AI use case would be interesting to talk about if people have questions on that. Where are you seeing the generative AI use cases? Onboarding, month-end closing, CFO advisory copilot. Intuit has launched a terrific product that uses generative AI, so we can interact and chat about those. Docyt is also going to be going to Intuit's QuickBooks Connect event coming up very soon. If you are going to be there, we would love to meet you on November 13th, 14th, or 15th. Stop by our booth. And with that, I'll pause over here.
It doesn't look like we have any questions. However, in order for this event to qualify for CPE, we are in need of about 17 more minutes.
All right, there we go. So we can make it interactive, and we can bring in some questions. So I'll wait for people to maybe send a chat message with a question, or I have some topics in my list which I can talk about in terms of what folks might be interested in. So Casey, if you see any questions, let me know.
Okay, we do have one from Alyssa. Does this integrate with softwares like Xero?
Very good question. We are actually working with Xero right now. Actively. We have interacted with multiple folks. This is where an interesting area comes in, which is API integrations. Now, when our organization provides open API access, it becomes easy for developers to integrate. However, in case of Xero, they restrict some of their key APIs, because of which reporting cannot be delivered by Docyt in real time. The reason of existence for our company is to prepare balance sheet, income statement, and cash flow report on an accrual basis in real time. So we are working out that particular kink with Xero. Hopefully in the next month or so that will be resolved, and then Docyt could get launched on Xero as well.
All right. The next question is, can you speak to the CFO capabilities?
Absolutely. Now, CFO capability is extremely advanced. I would not be the first person to say that generative AI is now fully capable of delivering CFO level advisory. No, absolutely not. It's still a long way to go. In order to do advisory, first, the bookkeeping function has to deliver the books. And once the books are there, then the real important thing is what's the industry vertical for the business. Then the second key aspect that you have to think about is what kind of engagement the business is allowing to do with this so-called CFO. It could be a human CFO, or it could be AI-powered CFO. So there are a variety of these kinks that are needed. One thing that happens when a business does not have an active CFO, and when they're trying to hire a fractional CFO or a full-time CFO, they have to spend a ton of time, weeks, understanding the business, going through the books, going through the business challenges to be able to successfully advise the business on its future financial needs. This is a capability where once uh, some company creates AI-powered CFO, it can be used by human CFOs to support more and more businesses. What we are going to be seeing in the next 5 to 7 years is as technology absorbs and crunches the data, more and more businesses will be able to leverage help from human CFOs, human accountants who are experts in using this technology, who earlier were not able to support large number of small businesses. Less than 2% small businesses today are able to afford a CFO. But we will see this number going higher and higher as more of AI technology comes in and crunches numbers. And we will also see industry vertical oriented optimizations. A CFO advisory for hospitality is going to be very different from a CFO advisory for a SaaS tech company or a CFO advisory for a manufacturing warehouse. So we will see a lot of innovation coming in this area, and existing CFOs will be able to support more and more businesses going into the future.
Right. The next question is, in audit, we require an understanding of application controls. I understand that generative AI's inner workings may be opaque. I'm sorry if I'm saying that wrong. How would this be addressed?
Absolutely, very good question. When organizational controls are in place, then a crunched up final decision is often not acceptable. People would want to know who made a certain decision, who took what action. Everything has to be documented. This problem is no more different than if you think about a self-driving car and the conundrum of insurance and the conundrum of if there's an accident when a self-driving car hits somebody, then who is liable? Is it the driver that's liable, or is it the company which built the machine, the car is liable, or is it the AI company which probably navigated the car in different ways that liable? So I'm sure a lot of smart people are going to be working on this particular part of the problem, on how audit controls will evolve when AI, machine learning, and generative AI is going to be making decisions. My thinking is that more and more transparency and more controls are going to be added to what today looks like a simple chat-based Q&A user experience. Every time AI makes a decision, it will have to document why it is doing so and so. Every time a human uses or consumes AI-powered data, they will also be logged, and that kind of decision making is going to be separated out. So this is an area where a lot of people are going to be working very hard in the next few years.
Okay. The next question is, can you speak more on accelerated month-end closing use case?
Absolutely. Let me talk about what does it take to do month-end closing. Docket's real-time accounting platform has a product called Revenue Flow, where all aspects of revenue and its reconciliation has to be done in real time. Now, month-end closing becoming real time really means that every workflow in revenue side and expense side and closing side has to become real time. So when a point of sale system is done for the day, can it send information to the AI system? Can the AI system go through every line item, categorize it properly, as well as eventually accept it into the books? When the bank deposit transactions come in, can it be matched in real time to what the point of sale system is saying? When a customer payment comes in, can it be matched to the accounts receivable invoices in real time? On the expense side of things, if a vendor has not sent a bill, can an accrual for that vendor still be created based on the contractual obligation with that vendor? When the credit card transaction eventually shows up, one level of categorization can happen, but when the employee scans the receipt, which has additional information, can the AI relearn and update the categorization after matching the credit card transaction with the credit card receipt? And can it do it in real time? So all of these simple decision makings, which are simple in nature, but when hundreds or thousands of transactions are happening in the enterprise financial back office, it becomes a mind-boggling complexity. For month-end closing to happen in real time, each one of these decision makings have to happen in real time. And then a soft closing can keep on happening until the ending balance of the balance sheet register is available. If you're looking at the credit card register, the ending balance is available when the PDF statement comes in the middle of the month. If you're looking at the bank register, ending balance comes when you get the bank statement at the end of the month. When you are looking at the asset depreciation area, the ending balance could come when the CPA has uploaded the depreciation spreadsheet, perhaps before tax filing or towards the end of year. But until then, can the system still do soft closing of every single register based on the information that's available? And then, as we all know, there are a ton of items and transactions which no computer can provide an answer to. If you see a wire transfer, if you see check number 1234 as the bank transaction, no machine can tell what happened over there. A human has to come in and tell who got paid and for what did they get paid for. This is where generative AI provides a helping hand. A mobile app that can ask and speak to the end customer and get answers to things which are blocking the month-end closing and move things faster. The moment end clients speaks into the product and talks about what was a certain transaction for, can generative AI process that verbal communication into processed data and then pass it on to precision AI to apply categorization and then proceed with the soft closing of the book? All of these technologies have to come together to be able to deliver real-time month-end closing.
The next one is, can you talk about outsourced bookkeeping services as part of professional services?
Absolutely. So outsourced bookkeeping, the word, it's a pretty old business model and concept. When in one geography, the way to deliver financial bookkeeping becomes very expensive or cost prohibitive, can another geographical area provide at a cheaper cost resources to deliver the same quality of bookkeeping? Now, before AI, all of this was human driven. And the risk over there was if a end customer is using a bunch of different software to do all of this kind of stuff, a bill.com, QuickBooks, Expensify, Brex, and something else, then the outsourcing location needed access for all of the same data, which added complexities on data security and whatnot. But with AI technology, products like Docyt can actually make outsourced accounting more tech-enabled and tech-powered. When all the data is in a single system, then controls on the data can be very tight. Security of data can be ensured. And when AI and machine learning is taking care of data processing, costs can go even lower. So now you don't have to go to a particular offshore location, but within the same environment, you can actually have technology delivering all of the outsourced bookkeeping.
And it looks like the last question so far is where do you see AI in accounting in 5 years?
Oh boy, technology is changing so rapidly that where it will go in 5 years is a very difficult to project. A lot of people say there will be general intelligence or automated general intelligence coming in the next decade. If AGI comes in the next decade, then all of us can go play volleyball on the beach while computers will do everything for us. Things are changing really at a very rapid pace. OpenAI's first iteration of ChatGPT, their version 2, initially it required tremendous amount of computing infrastructure. Now it can be compressed into your iPhone just within 24 months. What is GPT version 3.5 today? Would again be able to be compressed into your latest iPhone model of the next year. So the pace at which technology is evolving is just unprecedented, and humans cannot comprehend where we will be in the next decade. In the middle term, in the next 3 to 5 years, what we can be assured of is greater number of businesses will benefit from this advancement. Businesses, small businesses today that does not have even proper bookkeeping support, that cannot afford workflow software to pay the bills, to get travel expenses reimbursed, to really understand their financials a little bit better without needing CFO level assistance. All of these businesses will be able to afford cheaper AI powered technology to really understand where their business is going. And this will make sure that fewer SMBs die. A lot of small businesses die because they do not know how to financially operate their business in a profitable way, because they don't have support of good business advisors. Accountants and accounting profession is rapidly evolving to become business advisors. The grunt work of manual bookkeeping, when it goes away, it's going to save so much time for accountants and bookkeepers that they actually will be able to absorb more customers, more businesses, and be able to help them out in a much better way. So this is where in the short term, 3 to 5 years, technology is going to go, bookkeeping will become automated. But when you start scaling that up to 10 plus years or more, it's very difficult to predict where things are going to head at that point of time.
We did get a couple more. So does this integrate with Sage Intact?
Not at the moment. Docyt's philosophy is that expensive ERP products eventually are not going to be able to compete with cheaper AI-powered product. And this absolutely will put pressure on the NetSuites of the world or the more expensive enterprise products. There is no reason why ERPs should cost millions of dollars. Now, cloud already has brought the cost low, but companies like Sage and NetSuite will get tremendous competition from the likes of QuickBooks and even more cheaper software that we are yet to see. I can at least make this prediction that in the next 3 to 5 years, we will see at least one new company emerge that is going to automate the entire general ledger from top to bottom, and which could give tremendous amount of competition to the likes of Intuits and Sage and NetSuites of the world. But today, Docyt does not connect to Sage, and currently we do not have a roadmap to do that.
Okay, and then we have what are some obvious risks of using Gen AI in accounting?
Relying on generative AI for any accounting insight is probably okay. If you have a software that can connect to QuickBooks or NetSuite or Sage, where month-end closing has happened, financial data has been prepared, and then generative AI is just using that data to give you some kind of insight. That probably is okay. But if you are asking or if you're using generative AI in a workflow, that's a very risky bet to make. We have been testing generative AI in variety of use cases, and I mentioned about onboarding. If I go to one of these slides, we have been testing out ChatGPT and OpenAI's APIs in onboarding areas. What we realized was every little workflow box where you are making a simple prediction, like let's say, what's the zip code for a business's address? Even basic stuff like this sometimes could not be provided in an accurate way through a generative AI interface. What generative AI is good at is making a little bit of a predictive bet on what the human might expect as the next word and the next word and the next word. But if you want accurate results, you need more of the traditional AI and machine learning, which Docyt has combined together in a precision AI product. That is going to be able to provide a better outcome compared to generative AI. So if you are using generative AI in workflows, that will absolutely be a recipe for disaster. But if you're using generative AI to get consolidation or insights out of prepared books, then yes, it can be successful over there.
There are no further questions.
All right, fantastic. It looks like we have reached end of our time, almost at 11 o'clock. Thank you so much, everyone. This was a fantastic session. I look forward to doing more of these. And if there are any questions, please feel free to email me directly or just meet us in our booth in QuickBooks Connect if you're going to be there.
Thank you, everyone. You will receive a short survey pop-up once this does close out. So we do hope that you take a moment to answer those few questions. CPE credit will be processed within 30 days. And of course, access to the recording and a PDF copy of the slide deck will be found on the events portal page. Thank you all and have a good day.